Hi everyone, here is a little help for your mastery problem for chapter 1. I'm going to go through these transactions with you. Also going to go through some of the concepts that we learned from last week, and hopefully this will help you complete this problem. This problem is due September 28th, Monday. Okay, so the directions are Peter Gentry operates a service business called Doggywood Pet Suites, and they use the accounts that are going to be shown in the following accounting equation. For every transaction, you are going to, 1, analyze the transaction and determine which accounts in the accounting equation are affected. That's the first step. Second step, in the appropriate columns, you're going to enter a plus if the account increases, a minus if the account decreases, and then enter the amount, the dollar amount. Number 3, for transactions that change owner's equity, select the description of the transaction to the right of the amount. Okay, I'm going to stop right there reading the directions. There are 4 transactions that affect owner's equity at this point in our course, okay? 2 of those transactions increase owner's equity, and that is revenue and investment. So when you see any transactions that mention investment or any type of revenue, which would be cash sales or sales on account, both of those transactions increase owner's equity, and the description you would write next to each one would be either revenue or investment, okay, depending on which one it is. The other 2 transactions that affect owner's equity and result in a decrease in owner's equity are expenses and withdrawals. Okay, so any transactions that mention the payment of expenses will result in a decrease to owner's equity, and the description would be expense. And the other transaction that results in a decrease is a withdrawal. When the owner takes out any cash of the business for personal use, if you see a transaction that says owner withdrew equity in the form of cash, that's a personal withdrawal. The description would be withdrawal, and it results in a decrease to owner's equity. Okay, so let me get back to the directions. The final step then is to calculate and enter a new balance for each transaction. And before going to the next transaction, just make sure the accounting equation is still in balance. Okay, so the first one is done for us, paid cash for rent. And we come down here and we can see that this first one is done for us. Okay, paid cash, so minus 500. And since rent is an expense, it's rent expense, that's going to decrease owner's equity, and that's going to be an expense. So minus 500 under owner's equity. Okay, we calculate the new balance, and the second transaction is received cash from owner as an investment. So I see the word investment right away. I'm going to go ahead and write in investment here. And you're going to you received cash from the owner, $700. So your cash is going to go up by 700, and owner's equity goes up by 700. Okay, calculate new balances, 2,700. Carry the balances down in the other accounts that are not affected. So there's no change in these accounts. So you're just going to carry those balances down. All right, so that's the new balance. So the third transaction is paid cash for telephone bill. That's another expense. So this is going to be just like the first one was. So it's going to be minus 75 under cash, since you had to pay cash for that phone bill, and expenses reduce your owner's equity. Oops, I'm sorry. So that's a minus 75 under here. And right here, you're going to write expense. Okay. So if we calculate those, 2,700 minus 75 is 2625 is the new balance. 2625. You're going to carry down all the other account balances that are not affected by that last transaction. Oh, I think I'm sorry. Maybe somebody caught this from me before here. I don't know what I did here. 1,300. I was supposed to carry down. My bad. Just double check, make sure I did that right. Okay. And 1,700 minus 75 is 1,625. Okay. All right. Okay. I hope I didn't make any mistakes. I was going kind of fast. Okay. Number 4, received cash from sales. Sales, that's your magic word there. That's revenue. Okay. That's going to increase owner's equity. The other account there is cash. Okay. So if you received cash from sales and the amount is 1,050, cash is going to go up by 1,050. And owner's equity is going to go up by 1,050. And that is revenue because it's a sale. Okay. And we're going to update our new balance. 2625 and 1,050 is 3675. All right. Carry these other account balances down that were not affected. And this time, Mrs. Austin will look and make sure she's doing this correctly. Here we go, 1,300. And then 1625 and 1,050 is 2675. Okay. All right. Number 5. Number 5, bought supplies on account from pause and clause 275. Okay. So your 2 accounts affected from in this transaction are supplies and the and pause and clause. Okay. So if we look at our accounting equation, we can see pause and clause is an account payable. It's a liability. All right. So, and the amount was 275, bought supplies. So supplies is going to increase by 275. This is the third column here. So this is going to be a plus, and this is going to be 275. And pause and clause, we already owe them 1,300, but guess what? We just bought some more from them, and we did not pay cash. We bought on account. So their balance is going to increase. We're going to owe them even more than we owe them. So cash was not affected, so we're going to just carry that down, 3675. This account receivable is not affected. Who is that account receivable? Dr. Chpt. Okay, so that's a 0. We just did buy more supplies, so that increases. So that's 475. Insurance is still 100. Your balance now for pause and clause is 1575. That increased. And your owner's equity was not affected in that transaction, so 2675. Okay. Number 6, sold services on account to Dr. Chpt. Okay. Sold services, meaning you went to Dr. Shepard's office and you performed some type of service for him. Okay. He did not pay you cash. They are going to pay you on account. So now Dr. Chpt becomes an account receivable for you. You sold services, you made a sale, but you made a sale on account to Dr. Chpt. So your revenue, sales is revenue, that's going to increase your owner's equity, but Dr. Chpt now becomes an account receivable for you. All right, so 285, and this is the account receivable Dr. Chpt column. That's going to go up plus 275. You didn't owe him anything before, but now you do. And now owner's equity is going to increase by 275. And that's revenue. Okay. All right. New balance. Cash was not affected, 3675. Dr. Chpt, 275. Supplies did not change with that last transaction, so carry that down, 475. Insurance is still 100. Pause and clause did not change, 1575. And your revenue now is 2675 plus 275 is, oops, I did that wrong, pardon me. 2675 plus 275 is 2950. Okay, 2950. All right. Okay, I'm going to stop this video because it's going to be too long. So I got halfway through and I'll do part 2 next.